In a few weeks, the S&P 500 will see a very large reclassification, the likes of which haven't happened in over 17 years. This will have a big impact on some investors and almost no impact on others. But that won't stop some people in the media from trying to blow it out of proportion. They need something to write about after all. So I thought I would take 3 minutes and explain what's happening and why. First, what's changing. In mid-September, real estate will become a key sector of the S&P 500. Presently, it isn't. As a result of this shift, the existing sectors will have a lower weighting. Included in real estate companies, of course, are companies that build homes, apartments, and commercial property of all kinds. Now, the S&P is going to rebalance its indexes on September 16th to reflect the change, and index funds that track the S&P are going to follow suit shortly thereafter. But keep in mind that real estate companies are already included in the S&P. So this change simply reclassifies these holdings. So the real estate will be a standalone sector. That's it. Presently and before the change, real estate stocks were buried in the other sectors like financial, technology, and utility sectors. So now real estate has its own place at the table. Now, this will make real estate holdings easier to track, but that's about all. For people who have broadly based funds like us, it's a non-event. For people who have narrowly based sectors, the impact will be big. But it's a big wake-up call for everyone, and I'll explain why that is in just a minute. First, let me explain why this is happening now. The decision makers at Standard & Poor's understand how important real estate is in the global economy. In many markets, property values have performed quite well and compete excellently when stacked up against equity markets. Also, real estate has been a good way to diversify holdings and spread risk. Of course, real estate investing typically provides dividends, rents, etc. But because the real estate holdings are already in the S&P, people who hold the broad index fund won't see a dividend increase. So now, why is this important to you? Like I said, people who hold broadly based indexes probably won't even notice the change. But that's not where the story ends. Here's why I think it's important. Most investors think of the S&P as a static investment, but this shows that it isn't anything of the kind. You may not know it, but some of the holdings within the index of the S&P change every single year, and major overhauls like this occur from time to time. And therein lies the big takeaway from what's happening right now. If you take a step back, you'll see that this it proves the importance of paying attention to the market and adjusting holdings accordingly. That's what the people at Standard & Poor's are doing right now, and that's what they do every single year. So if you hear a commentator over the next several weeks try to make this shift into something that it's not, just change the channel. That's it. Have a great day. Let me know if you have any questions, and that's what I'm here to do, answer your questions. Thank you.